Hello and good morning, everyone at Jose Maria College. Hello to Professor Alexis Baligod. Thank you for inviting me over to give you this talk about cryptocurrency. I recorded the screen share on Zoom and then I'm recording this on video on my phone. So I hope you can just put the two videos together, the screen share video and this one of audio video. I'd like to point you now to the PowerPoint where I say that we'll talk today about cryptocurrency, what it is, how it is used, pros and cons. And I'd like to recall the moment when I met Professor Alexis in the convention, the National Finance Summit 2020, last February 16 of last year. It was in the One Esplanade, and everybody got together for a photo. And everybody there looking very good. All these bright students, I'm sure they're all running for honors. And we took one photo, but not everybody was looking forward, so we took a second photo. So now, okay, everybody is facing the camera. National Finance Summit, and I just wanted to point out that that was not the first time that I was interacting with students from Davao. I was in Davao also back in 2013 for a financial literacy caravan organized by the Junior Confederation of Finance Associations in the Philippines as well. I was in the University of Mindanao campus in Matina. And then 2 years later, I was back in Davao at the SMX Lanang. And in the crowd was Binibining Pilipina Supranational Jeza Huelar. Now she's very tall, so she very kindly leaned lower in her pose so that I will not look so short compared to her because she's tall. That was the occasion of the Finance Literacy Caravan, November 14 of 2015. We also in JCFAP hold quiz contests like the National Finance Competition or quiz contest. And you solve a problem and then you hold up the answer. And whoever gets the most answers, of course, wins. And then there's a Luzon winner, Visayas winner, Mindanao winner, regional winners. And then I hope that we get back to the system of having quiz contests and national financial summits. Anyway, for the topic for today, I'll talk about cryptocurrency. Basic definition, it's a digital currency in which transactions are verified and records are maintained by a decentralized system. It uses cryptography and it doesn't depend on a centralized authority. So I'm going to show you some examples of cryptocurrencies in the trade room of IQ Option. Here it is. So if I were to, well, first of all, this is a Bitcoin. And since 2016, it's been moving up and down, up and down, up and up. So it's now trading at 31302 or $31,300. If you want to buy Bitcoin, you click this green button. If you want to sell it because you think it's going down, you click the red button. And then if you want to look at the other cryptocurrencies, there's, of course, Bitcoin times 100. Let's look at the definition of Bitcoin. It's a digital payment network and it's a new kind of electronic currency. The first cryptocurrencies were released in 2009. Bitcoin holds about 39% of the total cryptocurrency market. Okay. Now, aside from that, there's Ethereum, there's Omisco, there's Cosmos, there's Binance Coin, Quantum, Cardano, there's Litecoin, there's Ripple, Zcash, Tron, and Dash. You can trade these as they are or times 20 or times 50 or times 100 of their value because there's sometimes very low price, 0.002, $0.03. So that's on IQ option web page. Let's look at expert option web page. It's this is Bitcoin. This is Bitcoin since many years ago. Let's see. Yeah. Yeah. There. Okay, so you can go through time and see what Bitcoin has been doing in the past days, months, or years. All right, so that's an idea of how the price goes up and down of Bitcoin. It's there. It's like the mountain kind of peaks and valleys. Now back to the PowerPoint. Okay, so it's a digital currency, and it was originally a way to send money electronically, which now we can do with ordinary money, and it's also a way to keep money safe and secure because of the codes and the cryptography. But then it was also looked at as a way to send money without being noticed by the police or border patrols. So that could be problematic. Or it was seen as a way to print money without permission of central banks. That may not be good. And then it was also seen as a way to build wealth by doing expert computer programming, which is good in itself. But will it be accepted by everybody? Let's say that I create some money in my basement or my backyard. Will it be recognized by everybody else? Question mark. So cryptocurrency can be contrasted with fiat currency in the sense that the original style of currency is money printed by a government, and money is backed up by either gold bars or economic power. If you have a strong economy, then your currency becomes stronger. If your interest rates are high and attractive, then money flows towards you and your currency becomes stronger. Meanwhile, with cryptocurrency, there's no government involved. There's no central authority. There are many small authorities, those who are computer programmers. And they're dealing with encrypted files, which they're good at. And it's a secure process. Yes, they're very good at secure processes. Is it the end all? Is it the ultimate kind of money? So that's the question now. Let's contrast the two types again. So currency starts as paper money or coins. I happen to know the chief of the central bank mint in Quezon City. So it's a big building near the Heart Center. And that's where they print the paper money, and that's where they make the coins. Apparently, peso bill, whether it's 100 pesos or 1,000 pesos, costs about 25 pesos to print that piece of paper back and forth. So imagine if it's 20 pesos and then of value on the paper, but then to print it you need 25 pesos of production. So that's why the 20 peso bill is now a coin. Now, ordinary currency can be sent electronically to pay for goods nowadays, so it's now a seamless process. I think that was the original intent for cryptocurrency. Meanwhile, cryptocurrency is electronic since birth, and it can be used to pay for goods, yes, and it can be also used to store value. With currency, you have a limited supply of peso bills or dollar bills or euro bills, and the demand goes up and down. Therefore, the price goes up and down. That's normal for most economic reality. If a good is scarce, the price goes up. If the good is plentiful, the price goes down. If there's high demand, you have high price. If there's low demand, low price. So the demand could be fluctuating up and down. Meanwhile, if the supply is steady, then it's the price which will tend to equalize supply and demand. When supply is low and demand is high, the price goes up so that people buy less. And then when the supply is steady but the demand is low, the price goes down so that people do go ahead and buy. So here's examples of the typical kinds of currencies in the world today. You have money of Greece, money of Vietnam, money of Czech Republic, money of India, etc., money of Thailand. So when it comes to currency, everybody works to earn money, and then there's industrial production so that you can produce cars and ships and refrigerators, and because of that, there's economic output. As long as there's economic output, then you can have an export of goods and services to abroad. At the same time, you can import raw materials, or you can import the goods that your country needs that you cannot produce very well. So therefore, there's trade. There's trade, and therefore you need transactions. You need money for those transactions, and that's why money has to be sent across countries, right? So somebody sends the goods and somebody sends the payment. Okay, so this is the ordinary type of need for currency. Now there's all kinds of computer solutions called financial technology or fintech, such as payment gateways, which allow you to collect money from your customers or to send money to your suppliers. There's one here that's called Sendit, Xendit. So that's one option. When it comes to currency, they're old style but effective, and they are legal and recognized. So that's something in their favor. When it comes to cryptocurrency, they're unregulated. They can be used by criminals. And are they secure? Yes, in many ways they are secure, but Bitcoin owners can still suffer theft or fraud. So, hindi pala perfect. Meanwhile, there are other disadvantages of cryptocurrencies. Bitcoin owners can still suffer from malware, from data loss, or accidental destruction of physical storage media. Cryptocurrencies have a following. Yes, they have proponents, but not yet widespread acceptance. In every country, there's a few banks that have accepted it, a few companies that say it's great, and a lot of others who are still skeptical. Okay, so are we going to be trading in Bitcoin or other currency? We could. Bitcoin is hailed as the money of the future, and it's the money of the internet. Therefore, it should go up to the sky, right? Unfortunately, Bitcoin prices go up and down. So sometimes up, sometimes down, just like any other asset. So therefore, you need to be on your guard when you're trading that asset. And with this asset, it's difficult to study the fundamentals, meaning the supply and demand. Here's a chart of Bitcoin. Year 2016, it's picking up. Year 2018, it hits a high of $20,000. It starts declining all the way down to $6,000 by 2019. Then it picks up again and goes up to $18,000, down again to $12,000, and now it's at $31,600. Who knows where it will go next year? It's possible that there is strong demand. It's possible. So this is the picture of fundamentals that I'd like to share with you. The fundamentals of asset prices are normally determined by earnings. If the asset is a building, then it has rental income. That's its earnings. If the asset is a stock, is a share of stock, then normally it gives cash dividends and it has a price that goes up over time. So therefore, you have the cash dividends plus the share price moving up. So that's earnings. And the underlying company to the stock also has net profits or earnings. So you can measure earnings when it comes to conventional asset prices, whether it's a share of stock or a real estate title or ownership of land, for example, or some business concern. Share certificate, yeah. So you have earnings as the number one determinant of the value of of this company, of this asset. And then you have risk factors, which could make the item attractive or less attractive. Then you have the valuation, whether the asset is cheap or expensive. Minor factors with conventional assets are liquidity and sentiment. Liquidity means, is there a lot of money flowing into the Philippines that's interested to buy this asset? It also means, are there lots of buyers and sellers? Are there plenty of buyers and plenty of sellers? Then there's liquidity. They can talk to each other. If there's plenty of buyers but no sellers, there won't be any transactions. If there's plenty of sellers but no buyers, no transactions either. It has to be plenty of buyers and plenty of sellers. And sentiment is whether you have a positive or negative forecast of the future. So these factors are what drives fundamentals. With Bitcoin and current cryptocurrency, I don't think you have earnings to speak of. I'm not sure what kind of risk you're talking about. There's no political or economic dimension to it. And valuation is, there's nothing that you can say that this asset is comparable to another asset. So it's difficult to do relative valuation, and I don't think it's possible to do absolute valuation. So you're left with liquidity and sentiment. The more money there is to chase after these goods, then the higher the price. So there's a lot of money chasing this good, the price will go up. If less money is chasing this good, then the price will go down. But there's no earnings or risk or valuation. So it's a lot more difficult to calculate what the price should be. What's a fair price? So therefore, there are some disadvantages of cryptocurrency, and Paul Krugman has repeated that it is a fad that will not last, or it is a bubble that may burst. American business magnate Warren Buffett thinks that cryptocurrency will come to a bad ending. That's what he thinks. Why is that? Because it's difficult to determine the appropriate price of cryptocurrency. With currency, yes, you can figure out what should be the price of a British pound or a Japanese yen or a Swiss franc. So let me show you how the supply and demand looks like for those. Here's the so that's Bitcoin. Look at currencies. So there's Euro, USD. Let's take a look. So this is the Euro and versus the US dollar on expert option. Let me show you IQ option. Look for this is a Japanese yen or the US dollar denominated in Japanese yen, 103 yen per dollar. Over here in 21 December, it was at 103.0, and then it went up to 103.7, went down to 102.6, went up to 104.273, down to 103.34, and now it's 103.8200. That's the supply and demand for the US dollar in terms of Jap yen. You can also look at the euro in terms of US dollars. It's now at euro US dollar, so $1.21 per euro. All right. So and then this is a system where you will be trading. I'll explain later how it works. It's basically deciding whether you think that the price will be moving up or you think it might be moving down. I'll explain later after I define what an option contract is. So career opportunities for cryptocurrencies could be, you could study Bitcoin and really specialize in it and learn the pros and cons. And then you'd be able to recommend it to people if they totally want to do business in Bitcoin or trade it or use it as a transaction currency. If you are expert in something, eventually you can make a career out of it. Okay, so I might not know much about Bitcoin now or cryptocurrency, and so I can't make a career out of it, but you could specialize in it and make a career out of it. I think I would recommend you study first ordinary money, study banking, finance, investments, study how to raise capital for new business. Usually, if the new business needs capital and they need to raise capital, then if you raise money for them, they pay you a fee, a finder's fee for the money. That could be a source of income. And then other ways of making money along this line could be improving your trading skills, your investing prowess, or specializing in hedge funds with absolute returns, or doing investment by algorithms. Okay, they're trading skills. Trading skills is meaning that you have to be very on the go with all of these data and charts and be able to read and check whether a particular asset is on its way up. One possibility for students is to look at how to trade stocks, forex, options, and crypto using IQ Option. It's a free software. It allows you to trade options, option contracts, which I shall define in a moment. And then forex is foreign exchange, stocks in Europe and the US, cryptocurrencies, commodities, and exchange traded funds. Your minimum investment is $1. There's free practice, meaning they give you a free account of practice money of $10,000, and then you make it your business to raise it to $11,000, $12,000, $15,000. You probably might have difficulty doing that the first month. Maybe the second month you will succeed. Maybe the third month of practicing this. It's not easy to make money on a very unpredictable market, but it's because it's really difficult to learn trading. You have to know your technicals very well, technical analysis. So for example, you can look at crude oil Brent and you can trade the commodity, or you can trade an option on the commodity. What I mean is, if you trade the commodity, you place an investment of say $100 worth of crude oil Brent, and then you might have to wait several hours for something to happen, whether it goes up or down. If you trade the binary option, you only need to wait for 2 minutes. Here's US dollar, Jap yen, US dollar denominated in Jap yen. It's forex, so therefore, if you buy $100 worth of this currency, then again you wait a few hours for it to move up if you want it to move up, or if you were selling it, then you go ahead and sell $100 worth of a currency and you wait a few hours for it to move down. It might take a lot of time. The alternative is to go for the option contract, which only takes 2 minutes. Here again is gold as a commodity. It's something that you can learn to trade using IQ Option. You can either click the green button if you think it's moving up, or you click on the red button if you think it's moving down. You click the green button if you think it's moving up, because if it does move up, your $100 investment becomes $190. If you think it's moving down, then you click the red button, and then your $100 investment in a lower price, if it's correct, you get $190 for the 100 that you invested. Okay, so let's study that now. Wait a second. I'm going to look for the definition of the... There, okay. The definition of option is, with expert option or IQ option, you have 1 minute to decide whether you think the price will move up or down. And then there's a window of 30 seconds where you just wait and watch to see if you won or lost money. You have 1 minute to decide, and then after 30 seconds, the price should be higher if you want it to be higher, or it should be lower than your strike price if you want it to be lower. Your strike price is the chosen price, the price at which you decide to buy or to sell. So you go to either to expert option, then you try a free demo. When it comes to IQ option, they give you $10,000 immediately as a free demo account. And then you can get started. So here's the demo account for expert option, $10,000 also. And then you will see the price of the asset. In this case, the asset is the Hong Kong top 33 stocks. And you see it's moving up and down. And you see pictures of people, and there's a number 50, meaning the guy bet $50 that this price will move up soon by the next 2 minutes. And then somebody else, there's a red 50 beside his or her picture. And it means that he thinks that the price is moving down. And he bet $50 that it's moving down. Talo siya ng 50 because the price moved up. Okay. This portion over here on the left side is where you observe what's happening to the currency. It's a binary option, therefore you decide whether you think it's going up or you think it's going down. It's either one or the other. And if you think it's going up, then you buy, and it goes up, you win. If you think it's going down and it goes down, you do win dollars. Right, so the first part of the screen is where you're looking at the price action, and you're seeing that the euro is moving up and down in terms of US dollars. And then there's the 9 seconds over here. It means that you have 9 seconds left to decide what you will click, the green or the red button. Remember, if you click the green button, it means that you invest $100 and you're thinking that the price of the euro will go up. You wait 30 seconds, and if the price of the euro did go up, then you win a few dollars. If not, you lose the $100 that you bet. If you clicked on the red button that says lower, it means that you're waiting for the price to go lower within 30 seconds. If it does go lower, then your $100 wins and becomes 190. But if you were mistaken, you're hoping that the price goes lower, but instead it went up, then you lose the $100. You're minus 100 in your account. Okay, so that's how it works. You have 60 seconds to decide whether you're going to click the green or the red button. Green means you think it's going up, red means you think it's going down. You finally decide somewhere here. This is in the yellow box, yellow oval, you have this strike price. You finally decide that yes, it's going up. You click the green arrow at this strike price, and therefore you think it's moving up. And then the 30 seconds begins where you think that the price will move up, and if it does move up, by the time that the option expires, then you win a certain amount of money. Possibly your $100 wins 90 and you take home 190. The money that you bet plus $90. All right, so if you bet more, like $200, then you're going to take home more money. It depends how much you bet, and it will affect how much you win. Right, so with expert option and with IQ option, you get practice money of US $10,000, and you can place bets of $10, $100, or any amount that you wish. You can place bets of $1,000 if you so decide. Right, so let's take a look at expert option and IQ option. First, the expert here. So here's I'm gonna look for okay, let's look at cryptocurrencies. You got for example Bitcoin, and then apply. So here's Bitcoin, and then there's okay, I'm gonna remove first the indicators. Okay. Wait a second. How can I remove the indicators? There. Okay. Where's my indicators? Okay. What? How did I? Okay. So, there. The current indicators. I'll remove them first. Okay. Good. Okay. So this is the price of Bitcoin as of 4:11 p.m. on this particular date. and you see that the price went to 31,733 and then went down to 31,689, and you're given a choice whether to click downwards or upwards. If you think it's continuing to go down, you click the red button. Invest 50, earn 75 if you're right, or you invest $50. If you lose it, it's minus $50 of your account. Now if you think the price of Bitcoin is on its way up in the next 1 minute and a half, then click the green button. So for example, I click now the green button, and then I appear there as having invested 50, and then luckily the price of Bitcoin is going up as we speak in this demo. I still have a few more seconds to decide. I think I have 15 more seconds, as you can see from the clock on the upper right. I have 13 more seconds to decide what to do. Other people are making their decisions. I think you have the right to click the button to add more. But the moment you're already in this zone, there's no turning back. You just have to stick with the investment that you made, which is 50, hoping that at the end of the next 15 seconds that it will be above your strike price. So there's a green line beside your strike price telling you that you should be hoping that the price ends up above your strike price. Okay, we're very lucky today because we invested over here $50, and then we ended up here, so we earned 25. We take home the 50, and then we also get 25 on top of that. So we have a 50% profit. So do the same again. Let's say that I click red. Then I have to wait until it reaches the end zone. Okay, it's now in the end zone, and I now have to wait 30 seconds to make sure that it remains below my strike price. Okay. Okay, it's still below my strike price. It's getting lower pa. So my $50 is gonna earn me 73 in a few seconds. There. So expert option tells me that I invested 50 and I take home the 50 plus $23. So all in all 73. Meaning first I gave out 50, but then I took back 73. So in a sense, I recovered my $50 investment, plus I got $23 pa. Okay, so that's how it works. And so you start with a demo account, and then you keep on investing and investing until you keep on making more money. Okay, so one last example. Well, no, before I make a last example, I'll add some indicators like moving average. So here, or you can add a moving average 50 or 20 period. Let's try Bollinger Bands, which I happen to like. The top line should be red, yeah, and then the bottom line should be green, and the midline should be, yeah, could be purple. Make it 3 pixels. So here, this is Bitcoin in Bollinger Bands. Hang on a second. See lang. Sorry about that. So you have a minute to decide what to do. Do you think it's going to move up? I think yes, because it's touching the lower end of the Bollinger Band. So I'm going to click up. I'm going to invest 50, and I'm thinking that it will eventually move up, and that if I'm right, then my 50 becomes 71. I invested 50 and I take home 71, meaning I get back my 50 plus I earn 21. The price is now above my strike price. Here's my strike price at 50, and the price is now at a few dollars above that. So luckily, so far so good. But we're approaching the end zone, which is the last shaded area. And at that point, you can't change anymore. You just have to wait for the 30 seconds to pass, hoping that the price will still be above your strike. So far, it's still above my strike price. For 4 seconds to go. And very good. So I invested 50, I got 71, meaning I did give my $50 to expert option by clicking that button, but then they gave me back 71. So I recovered my 50 and I got $21 on top of that. Okay, so this is how to trade expert option, whether Bitcoin or currency. So you can change the Bitcoin to, say, currency. You can change it to, say, Euro USD. If it's the afternoon in the Philippines, then you might as well take Euro, because Euro is active when the Philippine time is 4 p.m. to midnight. US dollars are active when Philippine time is 9 p.m. to 4 a.m. And yen is active roughly around our time, let's see, 7 a.m. to 3 p.m. Philippine time. Yen is active. Japan is like a couple of time zones ahead of us. Okay, so that's expert option. Now, if you go to IQ option, you can see the same Euro US dollar here. You can trade it also. So I'm going to suspect that it's moving higher. I'm going to click the higher button for green, investing $100, and then I have 23 seconds to go to figure out if I'm right or wrong. So it looks like I'm wrong. It looks like I'm right. Looks like I'm wrong. Price went down. Two seconds to go. I lost $100. So it's not as easy as it looks. You can lose money. And this teaches you that trading is difficult. And it takes a lot of months or even years of practice before you win 2 out of 3. It's not easy to win all the time. So here again, I guess that it probably might be moving higher. I click $100 to bet that it will move higher than my strike price. And then it's now in the end zone. I'm down to 26 seconds, 25 seconds to find out if I'm right or wrong. So far, I'm winning 87 out of on top of my bet of 100. If I'm right, I get the 100 back to me plus 87. So far, I'm winning. So far, the price is above my strike. Now it's below my strike. 1 second to go. Talo again. Let's try one more time. Let's click lower. So I'm gonna guess that the price will be lower in 13 seconds plus 30. Surprisingly, the price went up. So we're now 1 second to go before we're in the end zone, and we are in the end zone. It's now 26 seconds to go. You're wondering whether the price will favor you, whether it will go lower. It's currently above, so not looking good for our trade. No, not looking good. 2 seconds to go, and I'm out of the money. So $100 lost again. So difficult, huh? Let's try up. Let's try if it's going to be an up move in about 1 minute 30. And if you think that up is correct, then you can click the $100 bet again. So now you have $200 or even $300 on the bet, so to speak, no? And now we're in the last 30 seconds, 24, 22, 21, 20, 19. The trade is going against us. It's lower than our 3 strike prices. Two seconds to go. Nothing. So 300 lost. Okay, so very difficult. Very difficult. Try again. Try again with 2 bets of $100 each. Try again with another bet of $100 again, so it's $300 now. And so far, so good. We're now in the end zone, and we have one of the positions is making money. Now 2 of the positions are making money. I'm hoping all 3 of them will be in the money, meaning that the final price will be above my strike price. We got 14 seconds to go. Price went down. Price went down again, below all of the 3. Oh, then it went all the way up. And then I won 174. See? So, surprising. Right? So I recommend that you try this because it will help you improve your trading skills. This is using ordinary euro dollar, which is a standard currency. And this is a binary option situation where you either bet on the upswing or on the downswing. You can also trade Bitcoin. Here it's now, so let's look at Bitcoin for the past 3 hours. And here it is. It's 31,757.47. Although that price changes second after second. This would be the past 30 minutes of Bitcoin trading. And I have here 3 moving averages. I also have the awesome oscillator here, which gives you clues as to when you should buy or sell. Awesome oscillator, ideally you should buy it when the green crosses over the 0 line and keeps on being green, or when it turns red and then turns green again. Let's try it. This time I click an $88 investment, multiply times 3, and then I'm saying auto close at 2%, meaning I did click on the up move, so I'm thinking that it'll move up. And right now I am still negative 0.85% down. The moment I am positive 2% up, then I can take profits. It says there auto close at 2%. It'll take a long time, many minutes, many hours. So let's go back to the lecture. Right, so come back to that later. So finish my lecture on cryptocurrency, and see, and I was recommending to you that why don't you be expert in cryptocurrencies? Why not go ahead and be expert on it, and then you can make a living as a consultant or a specialist on cryptocurrencies. But you can also make a living by being expert on ordinary currencies as a bank trader, or as a trader for stocks and funds and money market or currencies. Or my other suggestions are be a specialist in money, in where to find money and how to make money grow. So where to find money means raising capital for companies. And then how to make money grow means working for a hedge fund and trying to get an absolute return. Meaning, if the markets go up, of course your fund should go up. But if the markets go down, your fund should still go up. That means in absolute terms, your investment fund should go up, rain or shine. That's what you call absolute returns. I say this because there are some fund managers whose job is to be 1% above the market. So if the market is 10% up, then they should make money grow 11%. But if the market is negative 10, then they should make money grow negative 9 is good enough. Right? So that's what you call relative performance. It's not nice to have money growing negative 9, even if the stock market was negative 10. So, mas okay yung absolute returns because even if the stock market went negative 10, your fund went up positive 10. That's much better than a negative 9. It requires a lot more expertise, and that's why you need to study how these hedge funds have the expertise to make absolute returns. And one of the reasons why they're expert is that they're able to make money even when the stock markets are falling. For example, they can short sell. Short selling means that you sell at 100 an item. So therefore, if you sell the item, you get $100. And then you wait for the price of the item to go down to 40, for example. And then if it's at 40, you buy back the item from somebody and you pay him $40. Out of the 100 that you received, you still have 60. Because you sold the item, you got 100, and then you bought the same item back at 40, so you have to pay 40 to somebody. 100 minus 40 is still 60. So you still have a profit of 60. That's short selling. Step number 1, I borrow a stock from you, I pay you 1 peso rent. I sell the stock at 100 pesos now. I wait for the stock to go down in price. I buy back the stock at 40 pesos per share. Then I return the stock to you. I have earned 100 minus 40 equals 60 pesos profit minus the 1 peso rent. 59. There. That's short selling. Hedge funds can do that. Now here's another diagram of the same process. Plus 100 minus 40 equals 60. Minus the rent. 59. When would you want to short sell? If you feel that there could be bad news that could cause the markets to go down, borrow some stocks, sell it at $100 per share, and then as it all comes tumbling down, buy it back at a lower price, and then you have a profit. For example, the lower price is $40, then your profit is 60. Sometimes stock markets do go down. And also on a weekly basis, they go up and down. So if you can just short sell the down moves, then you can make money on the short selling. This is practiced everywhere in the world except the Philippines. Kaya hindi pa masyadong uso. It's not yet common practice to do short sales in the Philippine markets because the commissions are too high and the internet's too slow. Now, there's another method called investing by algorithms. An algorithm is a set of instructions to the computer saying, if you find these conditions to be present, you buy the stock already automatically. And then the computer knows that once you reach a higher price, you sell the stock also automatically. So that's an algorithm. Look for the patterns in stock prices that will indicate that it might be moving up, and then buy. And then once you get a profit, sell. That's an algorithm if it's automatic already. And a computer can do this many hundreds of times per day. Even if it just earns a few pesos per trade, well, if you do this hundreds of times, you could start earning thousands or millions. You could still make mistakes, but hopefully the mistakes are smaller than the profits. There's an article on October 5th, 2019 from The Economist saying that the stock market is now run by computers, algorithms, and passive managers. Okay, computers, you know. Algorithms, I just explained to you. Passive managers are those who simply track the index in the countries where they are invested. So if the index goes down 10%, their fund also goes down 10%, and that's okay with their boss because they are passive managers by definition. Diba? So the opposite of that is the active manager targeting an absolute return. Even if the stock market goes down 10%, with the active manager and his absolute return, his fund goes up 10% because my fund goes up rain or shine. In this picture, you see that managed funds are, or automated funds are 35.1%. And then managed funds run by humans are 23%. And then other owners held by companies and held by others. There. Eureka Hedge is a website which tells you where to find the top performing hedge funds. Go ahead and visit that and find out who are the hedge funds and private equity funds that are out there in the world at large. These are funds which are allowed to do many things, such as short selling and investing via algorithms. Reasonably high tech, almost as high tech as cryptocurrency, but dealing with standard stocks and bonds and standard cash, ordinary cash. This is the Eureka Hedge Fund Index, which shows you that if you put all the hedge funds together, and they're very smart and they target absolute returns, generally the share prices, the prices of these individual hedge funds is generally upwards. So it's better than just following blindly what the markets are doing. Yes, of course there are a few moments when the price goes down, but in general these guys target an absolute return where even if the market's down, then their fund keeps on going up. Okay, so career opportunities in summary. Study first ordinary, regular, conventional money. Study banking, finance, investments, how to raise capital for new business. If you do that, you can receive big fees. And then target the areas that pay the highest. Those that reward trading skills and investing prowess, hedge funds with absolute returns, and investment by algorithms. You can eventually be bank manager or vice president. You can do that with ordinary, regular, standard, conventional money, banking or central banking, or go to international banks. You could either target a job in bank operations or asset management. If necessary, get a master's degree. I recommend all of you to get a master's degree because it will distinguish you from the many other college graduates in the country. So these are the Philippine banks. The largest three Philippine banks have an asset size of $50 or $55 billion. That's their total assets on their balance sheet. Equity plus liabilities equals total assets. Is that big? No. Indonesia, their assets are 90 billion. Thailand, 100 billion. Malaysia, 300 billion. Singapore, 400 billion. Banks in Hong Kong, 2.7 trillion in assets. Banks in Japan, 2.8 trillion in assets. 50 billion is small. You might want to apply for a job outside the Philippines to get practice in a big bank with truly global operations. When it comes to stock markets, do we have a big stock market? Yes, it's big. It's 290 billion large. But elsewhere in the world, it's in the trillions. So I wouldn't mind if you target to practice trading stocks elsewhere in the world outside of the Philippines because it's a bigger, wider world out there. You'll get more practice. Diba? So good. Thank you very much. I guess that ends my talk. And then I now would be open for questions. I guess difficult now, but you could call me on Zoom and then we'll have the question and answer with Professor Alexis. So thank you very much for listening And thanks for the invitation. Good day.